Hello traders, this is Fawad Razak, market analyst for City Index. Today is the 14th of November 2023. So we've just seen the release of US CPI, which came in weaker than expected, causing the dollar to sell off across the board. Bond yields have fallen, as you can see on the right hand side of the screen, testing the recent lows. You can see the dollar index is printing a new low for the week, reaching its lowest level since September, and the euro dollar has risen as well. So, in terms of the data, then the year-over-year rate was at 3.2%, which was a touch weaker than expected. Expectations were for 3.3% on the headline front. On the month-over-month front, inflation was flat versus expectations of a 0.1% rise, and core CPI came in weaker than expected at 0.2% month-over-month. So, all in all, it was a weaker than expected inflation report, and the market's reaction was a swift one. Earlier, I wrote an article on the euro dollar and highlighting the possibility for a run towards the 108 area where we have the 200-day moving average coming into play. And this is precisely what's happened. The euro dollar rising sharply after the inflation data was released, and it has in fact tested the 108 level as I record this. This level is where the 200-day moving average comes into play. Around 108 area, we also have a Fibonacci retracement level, I believe, the 38.2%. Yeah, just slightly above that. So 108 is an important level now. Let's see what happens insofar as today's session is concerned. So far, we've seen a big move up. So the onus is now on the bulls to defend their levels, and some of the key support levels now to watch on the downside include this level right here at 107.56, which was the high from last week. That level is now the first line of the defense for the bulls. And below that, the base of today's breakout comes in at 107.06. You don't want the euro to go all the way back down to that level if you're bullish on the euro dollar. But the underlying trend is starting to turn bullish, with price making interim higher highs and higher lows. Price is also above the 21-day exponential moving average, suggesting that the short-term trend is no longer bearish. Here you can see gold has also reacted in the way you'd expect from a weaker US inflation report, price finding support in this shaded region, which was previously resistance, where we also have the 200-day moving average coming into play. This area was previously resistance, now it's turning into support, which is precisely what the world would like to see. So for as long as the shaded region between 1931 to 1947 holds now, the path of least resistance on gold should be to the upside, with the next likely target being that 2000 level where gold previously found resistance from. So for gold to push higher from here, we'll need to see further weakness in bond yields, which looks like will be the case given the inflation drop and some weakness in other US data we've noticed over the last few weeks. Silver is also up today because of the weak inflation data. The key level to watch on silver is the hammerhead at 22.36, the high from the previous day, which is now going to be the most important support level to watch. Overall, silver is still in a bit of a consolidation zone. It will need to create a higher high around 23.50 area to trigger fresh bullish momentum. Now, the likes of the Nasdaq 100 and other US indices have been pushing sharply higher in recent days. The Nasdaq is again sharply higher following the weaker data. It looks like the previous high that was hit in July could be the next upside target from here at 15,933. But the UK 100 is not moving as fast as you would expect. Actually, the FTSE is not doing much at all. It's been stuck in a kind of an ugly consolidation around these levels, in part because of the strength that we've seen in the pound against the dollar. Pound was supported earlier this morning on the back of stronger wages data from the UK. Remember, we have UK inflation data coming up on Wednesday, which could influence both the pound and the FTSE 100. Nevertheless, we are looking at some early signs of bullish momentum coming back into the FTSE. So from here, we may see the index start to climb higher once we break a few resistance levels. The day before, yesterday, it had created a large hammer-like candle on the daily chart. So that's a positive sign, but we need to see a move north of that level to trigger fresh bullish momentum. Now, for more analysis, make sure to check out the news and analysis section at cityindex.com. See you in the next video.